Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. The Bank of Canada interest rate decision will take place at 10 a.m. ET. Adam has a nice preview that's on our website at ForexLive.com. You can go and review the fundamentals. His thoughts on what may or may not happen in the interest rate decision. My job is to talk about the technicals that are in play, and I'll do this in this video right now. Starting off by taking a look at the daily chart in trading. At the end of last week and early this week, the price moved down and fell below the 50% midpoint of the move up from the low price that we saw in the July to the high price that we saw in the month of October into early November. This is the trading range for the year, and the price did extend below that 50% retracement at 134.95 level. But as you can see, the market has since rebounded back to the upside. Also in play here is the 200-day moving average. That's a green line in the chart, and the blue line that represents the 100-day moving average. Those levels come in at 135.15 and 135.73, and with the current price trading at 135.66, we are below the 100-day moving average, but above the 200-day moving average. So in sort of a neutral territory here on the daily chart, I would take a move above the 135.73 level to increase the bullish bias. We did move above it earlier today and yesterday, but we could not sustain the momentum. So watch that level 135.73. We can see that more closely when we look at the hourly chart. And looking at that, here's the 100-day moving average. The price has traded above and below it over the last few trading days, as you can see. We also moved above the 200-hour moving average on the way to the upside here in the early Asian session, again in the European session through here, but that momentum could not be sustained. So sellers are trying to put a lid on this pair into the interest rate decision. I'm not surprised. What the Bank of Canada has to say is certainly going to influence the price action, and you don't want to get too bullish or too bearish in relation to the technicals, and that seems to be what we're looking at now. Also in play here on the downside is the 100-hour moving average. That's this blue line in the chart, and as you can see, that moving average has been moving to the sideways fashion here, also indicative of a market that is waiting. Okay, it's waiting for the next shove. Do we get that shove to the upside? Do we get that shove to the downside? If we move to the downside, the 200-day moving average is going to be in play. And of interest here is that the market did react to that 200-day moving average on the way to the downside. We did find early buyers against that level. The price moved higher, then we broke below that level and tried to hold underneath that level through here, but then moved above it and then reestablished support against the 200-day moving average. So if we get below the 100-hour moving average and then move our way toward the 200-day moving average, we could expect potentially see a stall against that level. But if we do break below that, I would expect stops to be triggered and the price to head down toward our low price that we saw on Monday near the 134.79 level. We also have that 95 level off of which was a 50% midpoint on the daily chart that came in play. So watch that level as well on the downside. Those would be the targets on a softer U.S. dollar, a stronger Canadian dollar, so a more hawkish policy signal from the Bank of Canada. Now, on the top side, what is clear is that if the price were to break above the 100-day moving average and the 200-hour moving average, well, maybe not so clear, but what we'd be looking for is a break of both these moving averages right here and staying above. Okay, so look for that shove, maybe that dovishness that the market interprets from the statement from the Bank of Canada to push the price above the 200-hour moving average, and this time stay above it. Now, going back in time, we have had difficulty staying above the 200-hour moving average going back to the mid-November, where we moved above it, failed, moved above it, failed, moved above it, failed, and in trading again yesterday and today, the price moved above the 200-hour moving average and failed twice on that attempt. So getting and staying above that level is a key action words for this pair. If we are able to do that, then we look toward the 38.2% retracement of this trend move to the downside that saw the price move from the high price back to November 10th to the low price that we saw in early December. Getting above the 38.2% retracement after a trend type move is always a signal for me to show that the buyers are more in control. So we do need to get above that 38.2% retracement to prove that. then we'd look toward this swing area through here, and also the 50% retracement at 136.66. So right now, an overall view is that the price is more neutral below the 100-day moving average, below the 200-hour moving average, and above the 200-day moving average. We are looking for the next shove in this currency pair to push the market price either above those levels or below those levels to prove that there is a new shift and a new bias for this currency pair. So there you have it. A look at the dollar versus Canada. Prepare yourself for the interest rate decision. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.